It's pretty wild sometimes how often the big headlines, the ones about political shifts maybe halfway across the world or a new international group forming, actually have this surprising ripple effect right here at home.
Hmm.
We're talking about things that can, quietly nudge prices at the grocery store or
Yeah.
maybe influence interest rates on your next loan or even reshape your investments.
Yeah, those global shifts, they might seem distant, but they often connect back in ways we don't immediately see,
Yeah.
affecting our wallets,
Yeah,
our future.
exactly. Okay, let's unpack this. Today, we're diving deep into two major global shifts using the stack of sources you provided. One is unfolding across Europe, a continent dealing with some serious political instability right now.
Right.
And the other involves that group of nations known as BRICS. They're evolving fast and looking to shake up some of the long-standing global economic rules.
Hmm.
So our mission today isn't just to, report the news. It's really to cut through the noise, simplify the complexity if we can, and pull out those crucial nuggets of knowledge.
Yeah, get to the core of it.
We want you to walk away understanding what's really happening, sure, but more importantly, what it could mean specifically for your financial decisions, your outlook.
And what's truly fascinating, looking through this material, is how these seemingly separate events, Europe, BRICS, they're often deeply interconnected. The sources give us both that immediate snapshot and hints at longer-term implications.
Right. Helps us see the bigger picture beyond just the day-to-day headline.
Exactly. It's a great chance to think systemically.
Absolutely. So let's kick things off with that first major theme. The political instability that's, well, really rocking parts of Europe. We should probably start in France because the analysis highlights a particularly turbulent situation there.
Yeah, France is a key example right now.
Think about it. A country going through 3 leadership changes in just over a year. It's kind of like your favorite sports team, constantly swapping coaches mid-season, right?
Huh, yeah, that's a good analogy. Creates a lot of uncertainty, makes it hard to plan.
That's exactly what France has been dealing with. Prime Minister Bayrou recently faced that no-confidence vote, stepped down. And that's the third government change in barely 12 months.
It really shows how weakened President Macron's position is. His party lost its absolute majority.
Right. So now the parliament's deeply divided. You've got the center, a growing far-right bloc, and then this fragmented left trying to pass anything significant. It must be incredibly difficult.
Leads to political paralysis, slow decision-making, and that inevitably spills over into the economy.
And if we connect this to the bigger picture, this isn't just about France, is it? It feels like a wider trend across the continent.
It absolutely is. The research we looked at points to Germany's government collapsing late last year over budget disputes. Remember that?
Oh yeah, that was messy.
And then you've got ongoing political chaos in the Netherlands coalition struggling to even form. The UK's had its share of leadership churn. Even Spain's been struggling to pass its budget, which is, a fundamental task of government.
Wow, so it's quite widespread.
It is. And this widespread political instability comes on top of an already significant financial burden. All European countries have pledged to spend 5% of their their gross domestic product on defense.
5%. That's a substantial increase.
It's huge. It puts immense pressure on national finances, driven by the shifting geopolitics, but it comes at a serious cost, especially when governments are already politically shaky.
Okay, so 5% of GDP on defense,
Huh?
political gridlock.
Mm-hmm.
You'd think the markets would be freaking out, right?
Eh.
But the interesting thing is how they've reacted so far.
Mhm.
Surprisingly, kind of calm, relatively speaking.
Yeah.
After that no-confidence vote in France, the euro actually strengthened a bit against the dollar. The French stock market, the CAC 40, stayed pretty stable.
Yeah, it seems a lot of that uncertainty was already priced in, as they say, and investors kind of saw this coming, adjusted their expectations, their valuations beforehand.
So they weren't caught totally off guard.
Exactly. But that calmness could be deceptive, like the calm before a potential storm. Experts are now warning about a possible snowball effect.
A snowball effect. How so?
Well, think of like a tiny crack in a dam. Doesn't look like much at first, right? But if you don't address it, that crack can grow fast, cause a lot of damage downstream, maybe lead to a bigger failure.
Okay, I see.
So Fitch, the credit rating agency, they've explicitly said they'll likely review France's credit rating soon, a downgrade. That means higher borrowing costs for France, makes it more expensive to finance their debt.
And that's not just a French problem, is it? Given how linked the Eurozone economies are.
Not at all. Significant strain on France could ripple through the whole EU's financial stability. Think about banks with lots of cross-border lending. They could be exposed. Which raises that question. How might these shifts in Europe indirectly affect global stability, maybe even the cost of borrowing for you?
That's the crucial link, Peg, yeah.
Yeah.
What does this mean for your investment considerations? So what specific areas should people be watching?
Good question.
Well, first, defense and aerospace. Seems obvious, right? With that 5% GDP pledge across Europe, companies in these sectors are getting a direct boost. And it's not just tanks and planes anymore, it's cyber surveillance.
Right, advanced tech, too.
So maybe looking at related ETFs, those bundles of stocks or specific companies winning European contracts could be interesting.
Makes sense.
Second, French government bonds, those OATs. You want to watch the yield spread, basically, the difference in interest rates between French bonds and, say, German bonds, which are seen as safer. If that gap widens, it signals more risk perceived in France. Prices could drop.
A key indicator of market stress, definitely.
Third, euro volatility. If things get shakier in France or spread, the euro could swing quite a bit against the dollar. So for investors, maybe thinking about currency hedging, protecting against those swings, or adjusting how much you have in European assets.
Prudent risk management, yeah.
And finally, maybe value and dividend stocks. In uncertain times, people often look for stability, right? So big established companies, banks, telecoms, essential goods that pay reliable dividends might become more attractive.
They offer a bit more predictability, potentially some resilience when things feel turbulent. It's all about understanding that interconnectedness, like you said. These things impact the value of funds you might hold, even indirectly.
Absolutely. Okay, let's pivot now from the old continent to this rapidly emerging economic bloc, BRICS. The materials highlight that virtual summit they had back on September 8th, hosted by Brazil's President Lula.
Right, that was significant.
And the key message seemed pretty clear. Boost trade and financial unity among themselves to counter what Lula called tariff blackmail. He was criticizing global protectionism, including U.S. tariffs.
And President Xi from China echoed that, didn't he? Criticizing unilateral trade wars. India also pushed back against linking trade to non-trade issues like environmental standards.
Yeah, it sounds like they're trying to create their own path. Imagine like a group of friends. Their usual bus route gets too expensive or unreliable, or the bus company sets rules they don't like.
Okay.
So they decide to pool their money, maybe start a carpool, or even buy a small van together. They're not necessarily trying to shut down the main bus system.
But they're building an alternative for themselves, one that suits their needs better, gives them more control.
Exactly. That feels like the spirit of what BRICS is aiming for.
That analogy captures it well. And what's really striking is the expansion. It's not just the original 5 anymore.
Right. Who's in now?
Since January 2024, you've got Egypt, Ethiopia, Iran, and the UAE as full members. Indonesia is set to join in January 2025, so that brings it to 10. Brazil, Russia, India, China, South Africa, plus those 5 new ones.
10 nations. That's a significant block.
It is. And what's also really significant is Saudi Arabia's status. They were invited in 2023, but the latest info says they're still under evaluation for joining next year. Their hesitation, that's a really important point, signals some internal complexities.
Interesting. Okay, here's where it gets really interesting, at least based on the headlines. De-dollarization. You hear so much about BRICS creating a new currency to replace the U.S. dollar.
Yeah, that gets a lot of buzz, often quite dramatic.
But the analysis we reviewed suggests the reality is maybe a bit different from the hype.
Quite different, yes.
Right.
The actual goal isn't really launching some single BRICS coin. It's much more focused on interoperability of their own national payment systems.
Interoperability, meaning?
Meaning making it easier for them to trade using their own currencies, increasing local currency payments for cross-border trade.
Okay, so it's less about creating a new global money and more like making sure all your different phone chargers can plug into the same outlet. Or making it easier for a bank in, say, Brazil to pay a bank in India directly in rupees or real without having to go through dollars first.
That's a perfect way to put it. The Brazilian central bank itself said it's pretty unlikely BRICS can build up enough assets to truly threaten the dollar's dominance anytime soon, maybe not for a decade. The real focus is linking their payment systems.
Got it. So not a flood, but maybe like a slow drip.
Some experts are calling it a drizzle strategy, a gradual, pragmatic approach, increasing local currency settlements bit by bit, rather than some big splash to replace the dollar overnight. It's about slowly chipping away at dollar reliance for actual transactions.
A drizzle strategy. I like that. It sounds more realistic.
It is. And while BRICS definitely offers an alternative narrative to the US-EU order, the articles also stress the internal disagreements. You can't ignore those.
Right.
Well, the India-China relationship is complex, often tense, border disputes, geopolitical rivalry. That's always there. Plus, they don't all see eye to eye on the Russia-Ukraine war. And then there's Saudi Arabia, still on the fence.
Right. The hesitation you mentioned.
These internal issues, they limit how unified their message can be. They slow down those ambitious financial plans. It really raises the question, can such a diverse group with competing national interests really maintain a strong enough united front to challenge the established global system?
That's a huge undertaking, yeah. Those disagreements seem like a major hurdle.
Definitely something to watch. It adds complexity that the simple headlines often miss.
Okay, so connecting this back to the listener, what could this mean for your investments? There seem to be clear opportunities, right? Especially in things like cross-border payment infrastructure.
The fintech companies building those bridges.
Exactly. And companies facilitating trade finance using local currencies, especially for raw materials, intermediate goods, and stuff that actually moves around the world. Related financial services supporting these new trade patterns could grow too,
Lots of potential in those areas.
but there are also significant risks. Those internal disagreements we just talked about, they could cause project delays, a big gap between summit declarations and actual execution on the ground.
Always a risk with large, diverse groups.
And Saudi Arabia's decision whether they fully join or not, that feels like a big swing factor, especially for oil payments moving away from the dollar. If they jump in fully and push for local currency oil sales.
That would be a much bigger shift than if they stay hesitant. Absolutely.
So for risk management, the advice seems to be, don't just react to the dramatic de-dollarization headlines.
Right. Stay grounded.
Maybe consider hedging strategies using the dollar index, which tracks the dollar against other major currencies. U.S. long-term bonds, maybe gold, could act as safe havens if things get volatile.
Standard diversification and hedging tools, yeah.
And crucially, track the concrete indicators. Is that payment infrastructure actually being built? Are more bilateral currency deals being signed? Is the volume of trade in local currencies actually growing? Focus on that, not just the common currency talk.
Exactly. Track the execution, not just the announcements. Ultimately, these shifts, both in Europe and with BRICS, they're not just abstract games. They could genuinely affect global trade, supply chains, maybe even the cost of the imported goods you buy.
Your coffee, your electronics.
Right. The world's getting more interconnected financially, and understanding these undercurrents just helps everyone navigate things more effectively.
So quite a journey today. We've dived into the political and economic shifts shaking Europe, the instability, the defense spending, the financial risks, and then the evolving role of BRICS, especially that pragmatic drizzle strategy to reduce dollar reliance.
And the key takeaway really is that these global events aren't isolated. They're tangled together, influencing each other, and they have the potential to shape your financial world in ways that might be subtle at first, but significant over time.
Yeah, staying informed about those connections feels more important than ever.
Absolutely.
So here's a final thought to maybe chew on. As Europe ramps up defense spending while wrestling with political instability, what's the long-term hit to its economic stability? And on the other side, how might that BRICS drizzle strategy quietly reshape global finance over the next 10 years? Not with a bang, but maybe with a persistent, slow shift that eventually, tips the scales in ways we aren't fully anticipating yet.
That's a billion-dollar question, isn't it? Or maybe the multi-trillion renminbi ruble rupee question these days.
Indeed. Definitely something to keep an eye on. We encourage you to keep watching these developments and continue your own deep dives into how these big global currents might affect your world.